Welcome back. You're watching Market Fatafat right here on ET now with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. And 30 minutes done of the show. Now, for the next 30 minutes, we have Nirav Chheda joining us on the show on the technical side. Very good afternoon to you, Nirav. Thank you so much for joining us. And looks like you are in the zone when it comes to the semi-finals, because the first talk that you're going to talk about is Zomato. Are you Zomatoing right now?
Before I start, I'd just like to say, hopefully all of us can send positive energy to the Indian team and it comes victorious today and probably in the final as well. Yeah, so, Zomato at this point of time, the overall chart is superb. If you see, it's a very good reversal in place, good consolidation went in around that 50 to 80 odd levels, then a breakout. Now this stock has broken out above a very important level. It has come down from 160 odd levels and it is broken now above the 61.8% retracement of the fall from 160 to about 40 odd levels. Now from here, there is a good chance this stock can reach 155, 160, which is where it fell from. So for that target, one can look to buy the stock at current levels. The nearest support level is around 110, so that should be your stop loss.
Absolutely, keeping an eye out on Zomato. But Nirav, to answer your questions, we all are sending positive vibes because we all are dressed in this blues. We are bleeding blue as well. And Cheryl's surely supporting the markets because she's supporting the green side as well. So there is positivity everywhere in the studio as well. But let me talk about the next stock that's in focus, and that is Trident. Now, this one is in focus on the back of its numbers. When you look at it, revenues up by 25%, coming in at almost 180 crores. Looking at the operating performance, also strong operating performance coming in from Trident because EBITDA up by 33%. Margins, a sharp expansion there as well of around 400 basis points. 75.6% is what the margins came in at. And what an up move that we've seen coming in the profits of the company. 141%, so almost 3 times in terms of the profitability, the growth that we've seen there as well. Profits stand at 90 crores, so very strong performance that came in from Trident Limited. And on the back of that, we've seen that the stock is buzzing in trade almost near the day's highest point as of now as well. 5.5% uptick as of now.
All right, talking about earnings, good set of numbers. Even India Bull Housing Finance actually posted good set of numbers in the quarter gone by, and that particular counter also saw a sharp up move as much as 4% last time I checked, hitting the highest level since October 3rd, right now holding on to good gains above 3%. The company actually posted approximately 3% rise in their consolidated net profit in the quarter gone by, while their revenue from operation dipped pretty marginally on a flattish basis. But if you look at it, the fact that the profits have risen better than estimates, you can see the stock doing good, actually showing good gains of about 3% as we speak.
Okay, let's move on to the next one. And Ethos 2 is in focus on the back of numbers, Anish.
Yes, and Ethos is up 5% in trade today. Company reported a year-on-year revenue increase of 32%, reaching 235 crore. EBITDA shows a significant growth of around 43% to 37.3 crores, with EBITDA margin at 15.8% compared to 14.7% in the previous year. Net profit as well for the period is up by 37% compared to its previous year. Also, if we see the stock chart, stock has touched record high level and it has advanced almost 27% this month. In addition to that, the stock is trading above 50, 100 and 200 DMA, which adds to the optimism in the stock.
All right, moving on, Nirav, let's talk about VA Tech Vabag and how is this one looking on the charts, because off late we've seen a lot of action in the stock.
Yeah, see, this stock has come down from sub 930, 940 at levels. It took a long time for a reversal for this stock. Good volumes have been seen. Now on the reversal, an inverse head and shoulder formation has been seen, and a breakout of the same has been got around that 440, 450 odd levels, which has been retested in the recent fall by this stock. Now, after this retest, there is a very good likelihood that this stock will now move towards those 900, 930 odd levels in the medium term. So, in the near term, a flat kind of a formation breakout has been got at around 550 odd. So, this is a good time to add this stock in your near term and longer term portfolios. Near term target is around 650. It can come very soon. Your stop loss would be around 560 for near term, and a longer term period again 900 is quite possible.
Okay, 900 is quite possible for Viatech Baba given the long term. That's the word coming in from Nirav. Let's move on, talk about RK Forgings then Ankita. Why is this one in focus today? What's the news flow?
That's correct, Vinay. RK Forgings is in focus today. In fact, it was up 1% in trade today. They have raised 1,000 crore rupees at 614 rupees per share from Nomura, BNP Paribas and Small Cap World Fund. And on the back of this news flow, we did see an uptick of 1%. Right now, it is up 0.7%. That's the news flow coming in on RK Forgings.
All right, moving on. Let's talk about ITD cementation. After Viatech Babag, you are finding this one also attractive, Nirav?
I've spoken about this stock a lot of times, but I'm quite fascinated because the volume profile of this stock before 2020 was different and post 2020 is totally different. It's in a different tangent altogether. The volumes, they've been terrific, and this stock has just moved up above its 6-yearly highs. Which were around that 235 to 40 odd levels, and post that I believe this stock should become very aggressive on the upper side, and there is a good likelihood this stock first reaches this 300 320 odd levels probably in a week's time only. So look to buy this stock at current levels. It's very well placed at this point of time. 238 should be your stop loss from current levels.
An eye out on those levels for the stock ITD cementation. Let's move on and talk about EMS Limited. This one is on focus on the back of its numbers, Q2 FY24 numbers, recently listed company. You can see the stock is locked in upper circuit today after a good set of numbers is reported by the company. 53% uptick in terms of the revenues on a quarter-on-quarter basis, coming in at 211 crores. Operational performance also quite strong. 27.1% is the EBITDA margin versus 23%, 23.4%. So around a 400 basis point expansion in terms of the EBITDA margins, and profits doubling in terms of the profits. 23 crores versus 45 crores is what it came in at versus last year 23 crores. So strong performance by the company on a quarter-on-quarter basis. Let's keep an eye out on that. EMS Limited locked in upper circuit as of now.
All right, Nirav, let's talk about ONGC. Strong gains coming in on this particular counter in today's trading session. It is actually supported by a news flow, but on the charts, ONGC, how is it looking to you now?
The charts for ONGC quite similar to what Wabag's chart is. An inverse head and shoulder formation is in place. It has been broken out above and also retested. So in that terms, it is very similar. Also, this stock has come down from 300 odd levels. Took a long time.
I think we have snapped the line with Nirav. We'll reconnect with him on the vote coming in for ONGC. But Ansh, coming to you, and Natco Pharma is a stock that you picked out for us today. What's the news for you?
So Natco Pharma is down over 3% in trade today, and it is down by around 7% from day's high. Company's financials for Q2 show a decline in performance. Revenue records a 10% decrease on quarter-on-quarter basis, amounting to 1,031 crore. EBITDA experiences a 13% decline, standing at 458 crore, whereas EBITDA margin contracts to 44.4% as compared to 46.3%. Net profit also witnessed 12% decline, amounting to 369 crore compared to 420 crore in the previous quarter.
All right, Nirav, actually you were making a point on ONGC while we snapped that line. You said it is going to take a long time, and that's exactly what happened. The line snapped exactly at that moment. So continue and tell us about your take on ONGC.
So I believe this stock can come towards that 260 to 80 odd levels. So look to buy this stock. You can buy in good quantity. It's at a very good level. You can keep a stop loss of 190 for your long.
All right, moving on then from ONGC right on to Suzlon, because that one has hit a 12-year high in today's trading session, hit an upper circuit of 5% at a 12-year high, 40.5 rupees per share. That is what it had reached. Right now the stock is trading at a 4.5% gain. This because the strong gains that we are seeing in Suzlon today is supported because of the fact that MSCI has announced that the company will be added to the MSCI India Index, and MSCI has added several companies to its India Index as part of its review of global standard indices. This is what MSCI said in an announcement. The changes will be effective from December 1st. Meanwhile, the company also saw 3 large deals aggregated, that is the block deals aggregating to about 59 lakh shares on the NSE today. The first deal of more than about 33 lakh shares took place at an average price of 39.95 rupees per share. The second constituted more than about 10.8 lakh shares that came in at around 39.75 rupees per share, and the third deal was over 14 lakh shares. So you had a block deal also that taking place, or multiple block deals actually taking place in Suzlon today, and the fact that they have been added to the India index by the MSCI, the stock is at a 12-year high today.
Okay, let's move on to the next one. And coming in from the realty space, you've picked out DLF for us, Nirav. On the charts, what's the view now for DLF?
So real estate as a whole is moving, and almost every stock is likely to move up as well from current levels. But DLF I've picked because again, it's a 10-year, in fact a 14-year breakout, and this breakout has come above this 540 odd level. So this stock has it in it to move above that 800 level. So look to buy the stock at current levels. Good volume have been seen as well. So current levels at 620 odd, you can look to buy with a stop loss of 600. Your first target for the near term would be around 710. The second one is above 800.
Alright, moving on then, let's talk about ISJEC Heavy Engineering Ansh, and why is this stock in focus today?
So the stock is up 3% in trade today. Company results for Q2 actually showed a mixed performance. Despite of 3% decline in revenue reaching to around 1,473 crore, EBITDA demonstrates a significant improvement, surging by 47% to 134 crore. EBITDA margin witnessed a notable increase, standing at 9.1% compared to 6% in the previous year. Net profit also jumped by twofold from 30 crore to 60 crore in this quarter. Also, if you see the chart of the stock has given a strong gap up opening today, and it has also given a breakout from a key horizontal resistance trend line.
Let's move on to the next stock, and stock number 29 for today, Nirav, is GAIL. Now, when you look at it in the last 1 month, seems like a slight bit of a subdued move up. Minor correction is what we've seen from the run-up that we saw previously. So, is it the right time to actually start picking out and adding more GAIL, or would you just wait for someone to add GAIL?
So, oil and gas has been underperformer in the last couple of years. Finally, most of the stocks are actually coming up. OMCs for that matter, or ONGC or Reliance, or right now GAIL, I believe these stocks are now at a very good price, and they are breaking out. So that is what is happening in GAIL as well. Good volumes, a lot of shorts have been covered in the last couple of months, and now I believe this stock is ready for another up move. It can go up towards that 150 odd level. So for that level, one can look to buy at 127 odd, which is where it is right now. You can keep a stop loss of around 121 for your longs.
Alright, moving on then, let's talk about Rail Vikas Nigam, and that particular counter is in focus on back of an order win. If you look at the stock price of Rail Vikas Nigam, one point in time it was trading higher by about 4% or so, now still holding on to gains about 2.3%. The company received a letter of acceptance worth about 311 crore rupees from the Central Railway, and this order is for building tunnels and bridges in Madhya Pradesh. So on back of that order win, you can see the stock holding on to good gains.
Let's move on and talk about IDFC and IDFC First Bank. Ankita, why are both these stocks in focus today?
That's correct. Both these stocks are in focus because the Pension Fund Regulatory and the Development Authority, along with the National Stock Exchange and Bombay Stock Exchange, have approved the merger of IDFC Limited and IDFC Financial Holdings Company with IDFC First Bank. Now, the company has received a no objection and an observation letter from both the NSE and BSE, according to the exchange filing. And the merger remains subject to various statutory and regulatory approvals, including from the RBI, the NCLT, and the respective shareholders of the company involved in the scheme. That's what the filing said. And on the back of that, IDFC and IDFC First Bank both are in focus, up almost 1% in trade.
Alright, moving on then, Nirav, let's talk about Kotak Mahindra Bank. How is this one looking on the charts to you? Because I believe a lot of them have lost or are rather out of patience waiting for Kotak Mahindra Bank or even HDFC Bank to start performing with consistency.
I think we've got a little mixed up. I've actually sent Karnataka Bank. It's the same symbol actually. It's KTK and Kotak. So, a little confusion, but it's fine. I'll talk about both. See, first I'll just talk about Kotak Bank. At this point of time, you're very right, where these two stocks, Kotak and HDFC haven't moved up at all. But Kotak as well, as HDFC, they've seen their downturn. Most importantly, I'm seeing a lot of short covering action in terms of banking, and they should come up as well. But the pace at which they'll come up will be a little slow. So slowly and steadily, I believe Kotak Bank should reach above that 1850, 2000 odd level. So you can buy for those targets with a stop loss of around 1720. Same as with HDFC Bank, but I really like Karnataka Bank. There is a reason for it. There is a 15-yearly breakout in the stock, and that breakout has been retested now with this recent fall around the 210 levels. Post this, the very good reversal has been seen with volumes, and I believe this reversal will take this stock all the way towards that 280-300 levels. What happens is this stock has to actually make up for the 15 years of consolidation that went on. So it is not going to settle for 10-20%. It is going to jump a little higher. So at this point of time, I believe Karnataka Bank is poised to reach those levels right now. So look to buy the stock at current levels. 220 should be your stop loss.
And this is how we get more stocks from Nirav. Whenever we want one or we want more stocks, this is how we get more ideas. But that was Nirav's view on Kotak Bank as well as Karnataka. And I did hear him say and slide an HDFC Bank in between as well. So let's keep an eye out on all of that. But we had Anand Shah, head PMS and AIF investment, ICICI Prudential EMC. In terms of the banking space, what is his view coming in there? What are his top picks? Listen in.
Banking, while it's been very soft, large cap banking, we have been seeing a lot of FI selling within that segment. So despite of fundamentals remaining strong, earnings also coming off fairly strong, the stocks have been subdued. To that extent, the valuations have become very attractive. So banking remains the top pick among the many sectors. The earnings trajectory remains strong. Balance sheets have been very strong. Asset side performance has been fairly resilient, and despite of that, the stocks have been solid.
Let's move on and talk about KDDL Limited. Yes, previously we did highlight Ethos. Now, Ethos is a subsidiary that was of KDDL and now listed. So, yes, they are also into making watches and components, manufacturer of components. So, KDDL too is in focus on the back of a strong set of numbers. We've seen that luxury market booming, right? And all that related to all the luxury watches also are doing quite well. So, KDDL, manufacturer of components over there, is in focus on the back of its great set of numbers that is reported by them as well. 31% uptick in terms of the revenue. EBITDA performance quite strong over there as well. Look at it in terms of the operating performance, right? EBITDA came in at 62 crores versus 24.7 crores, which is a 152% uptick on a year-on-year basis in terms of the EBITDA. And margins, doubling of margins, 18.34% versus 9.5% last year. Profits also obviously a strong growth in terms of the profits of the company, 32 crores versus 6 crores last year, 6.8 crores. So very, very strong performance by KDDL Limited on the back of a good performance. We're seeing the stock price also buzzing in trade, up almost 5% as of now, Cheryl.
All right, let's talk about a stock that was actually at the pole positions since the world go, and that was Hindalco. No doubt now it's now you have Eicher Motors that is the top gainer on the Nifty, but Hindalco, what a strong move the stock is registering. Yes, a lot of economic data also has come out on China front, a positive one, and that also is aiding the move in the metal stocks. But Jefferies also has increased its target price on Hindalco to about 600 rupees per share from 575 rupees per share. However, maintaining the buy position on the particular counter, they're saying they're finding the stock to be reasonably priced as of now. Remember, the company had reported their earnings as well. Strong set of numbers also coming in from Hindalco in line with Jefferies' estimates. They're saying that the EBITDA for the quarter gone by was 6% higher on a year-on-year basis, but marginally down on the quarter-on-quarter basis. What Jefferies is saying, they believe that the company's quarterly EBITDA trend has bottomed, and they're saying they're confident that Hindalco subsidiary Novelis would be able to reach its EBITDA per ton guidance of around $525 in Jan to March quarter. They're also saying that the company has showed confidence after Novelis reported a sequential rise in the EBITDA per ton for the third straight quarter in the quarter gone by. They also said that the fall in aluminium prices during the past 2 years has affected the margins. However, the brokerage house has also pointed out that the prices have stabilized for aluminium, and therefore they are actually betting on the stock, raise the target price as well.
Okay, surely keeping an eye out on Hindalco over there. But let's move on and Ankita talk about Grasim. This one isn't focused on the back of its numbers as well.
That's correct. Grasim isn't focused on the back of its numbers. And let's quickly go across and look at the numbers then. We have registered a growth of 15% on a consolidated basis in the net profit on a year-on-year basis. Its revenue from operations has also come in at 30 crores, which is up almost 10% on a year-on-year basis. The EBITDA of the company also rose 19% on a year-on-year basis. And this is all thanks to the contribution from the key subsidiaries of Ultratech Cement and Aditya Birla Capital. Now, the company also noted that the pent-up festive demand resulted in volumes in the VSF business, while the oversupply in the domestic market of caustic soda and lower realizations in line with sharp decline in global prices impacted the overall standalone performance. And so that's the reason why we did see a bit of a somber performance in the standalone case. And on the back of this, Grasim is going to be in focus, up 0.7% as of now.
Alright, that's Grasim for you. Ansh, another counter that is in focus on back of its earnings, and that's Walkout.
Yes, Walkout revenue saw a move of 11% in revenue, reaching to 753 crore. EBITDA shows a substantial growth of 67% to 72 crores, while EBITDA margin of 9.6% compared to 6.3% in the previous year. The company reported net loss of 77 crore, still an improvement from a net loss of 189 crore in the same period last year. Also, if you see the stock chart, stock has hit almost 18-month high today, and the volume is 3 times more than 20 session average trading volume. Stock is not moving right now, it's almost flat, but if we see the chart on a weekly time frame, then the stock has given a breakout from its 20-week consolidation.
Okay, that is Walkout for you all. Let's move on and talk about Tata Steel on the charts then. Nirav, what's the view on this one now?
So I think that 2-yearly consolidation is over. The stock had witnessed a breakout above that 118, 120 odd levels. That has been retested, in this recent fall, and now it is ready for another up move, and it will be a significant as well. So I believe this stock can reach about 150 odd from current levels. Look to buy the stock with a stop loss of around 112 for your long.
Right, moving on, Ankita, let's talk about Tata Consumer and why is this stock in focus?
Yes, Tata Consumer is in focus today because they have received an approval from the NCLT Bengaluru bench for the merger between Tata Consumer and Tata Coffee. Now, the scheme will be effective once it receives approval from NCLT Kolkata bench, and on the back of this, Tata Consumers is up 1.3% in trade today.
Alright, let's shift focus then and let's talk about RailTel, and that particular counter is in focus in today's trading session. The reason being that the Bihar State Electronics Development Corporation has cancelled a letter of intent for a project worth about 76.1 crore rupees that was awarded to RailTel Corp for network connectivity in institutions in the state. This is what the company has informed in the filing. In the filing, they've said that the order was cancelled due to unavoidable reasons, and that Bihar State Electronics Development has released the performance bank guarantee that it had submitted. The order involved implementation as well as management of an electronic knowledge network in academic as well as administrative buildings of government engineering colleges and polytechnic institutes in the state of Bihar. And the network would actually include internet connectivity as well, Wi-Fi system and smart classes. But the Bihar Development Corporation has actually gone ahead and cancelled that tender, and the stock is now at the day's lowest point.
Okay, surely keeping an eye out on RailTel as well. But that was the last stock for today. So thank you so much.